Hi, everyone. Todd Rosenbluth of TMX VettaFi. Thanks for joining us. I'm here with Sandra Testani of American Century. Sandra, how are you?
I'm doing great, Todd. How are you?
It's great to be here. So American Century, inclusive of Avantis, you guys recently crossed $75 billion in ETF assets. Congratulations.
Thank you. Yeah,
What
amazing.
it's a great milestone. I know many people know of American Century, know of some of your index capabilities, but actually most of the money has gone into active ETFs. Why do you think active ETFs have been so popular?
Mm. Yeah, well, first of all, thank you so much, Todd. We're so pleased to have achieved that milestone. I think it's at least we hope it's evidence that the strategies we're offering are of value to the advisors that we serve. But in terms of active, yeah, most of the assets that we have under management are actively managed. And it is surprising, I think, to some that active in ETFs have experienced such significant growth. When we entered the industry in early 2018, all of the active assets in the industry had less than $50 billion total. And if you fast forward to where we are today, we've crossed over that $1.1 trillion mark in the US. So it's been a significant growth. It's still under 10% of the AUM, but we're seeing, year to date, more almost 40% of the flows being attracted to the active space. And yeah, it's just been really impressive to see this evolution in the industry.
So you and the team offer both equity and fixed income active ETFs. Are there different drivers towards these products?
Yeah, I mean, I think that in general, the drivers are the same. The ability to access active management in an ETF that can be, cost effective, have high tax efficiency, and then also bring in, the potential for outperformance, for improved outcomes, some flexibility to navigate uncertainty. Um, have ongoing and daily monitoring of a strategy's alignment to its holdings and not be, beholden to what might be a bit arbitrary in terms of the index rules. Those are generally the same, but there's probably some differences. Like for equities, we've had some really interesting market dynamics, notably in the US, how concentrated some of the indexes have become, whether it's, meme stocks, valuations, right? So there are some things that I think are leading to a desire to diversify in equities. And then for fixed income, yeah, I think in general, the value proposition of indexing is less clear. The weightings skew to those most indebted companies. The market in fixed income is much less efficient. So the indexes aren't necessarily going to represent the full opportunity set, whether it's in the broad, municipal space and having access to some of these non-rated holdings or securitized. And also it's very difficult to replicate the holdings. So the drivers, I think, maybe are a little bit different depending on what the asset class is, but the benefits I think are pretty consistent among the two.
Interesting. So you mentioned earlier that this year we've seen disproportionate money going in from a share standpoint into active ETFs, but there probably are still some misconceptions about active ETFs. Maybe you want to touch on one or two.
Yeah, sure. Um, it's been a significant growth area, but it's still only about 10% of the assets overall. So I think one of the misconceptions is that, ETFs equal passive. That's something that we're constantly educating on. I think tax efficiency continues to be raised as not necessarily a misconception, but more just, hey, can you validate that this is actually going to deliver what I've come to expect in an ETF? And so we thankfully have enough history behind us now of several years of having a track record where we can point to the results to validate. And I think also, in use case terms, maybe initially there are advisors who were thinking that these might be sort of a fringe element of a portfolio, but more and more we're having conversations where these types of strategies can be uh, larger parts of an asset allocation can represent a core holding. And we're even starting to see them being used in model portfolios.
Yeah, the growth of active ETFs has been tremendous. Sandra, thanks a lot for the time.
Thank you, Todd.
So you can learn more about our take at VettaFi, our views on American Century products by visiting etftrends.com. We'll see you next time.